All right, looks like we're at time, so let's go ahead and get started. My name is Chinda Chun, and I'm with NACB, the Consultants Training Institute. I want to thank you for joining us for the Around the Valuation World webcast today. Before we get started, I want to go over a few housekeeping items. First, to obtain CP credit, if you have an AVW subscription, please remember to answer all the poll questions that pop up on your screen during today's webcast. Again, if you have a subscription, the CP certificates will be available on your nacb.com portal within 7 to 10 business days after today's webcast. If you are interested in subscribing, there's a link in the material for you to click on, or you can contact our member client services team at NACB, and we'll be happy to help you with that. If you have any questions during today's webcast, please use the chat feature in Zoom, and we'll be happy to address those questions for you if time is available. With AVW and the AVW International webcasts, we try to cover all the hot topics in the industry. Within the 2 hours that we have, we can't cover all the information that's available. So there are links in the material if you want to stay updated in the profession. And with that, I'm going to turn the time over to Mel, who will get us started with the webcast today.
Thanks, Chinda. Welcome to everyone. Welcome to the July program. I can't believe we're in the second half of the year already, but here we go. So we've got another great program for you today. We're going to start off with industry headlines, as we always do, with Janae, Castell, and then Ed Mofrad's going to interview Ron Rudich and Glenn Black on the engagement letter agreements, and one of the things that keep us out of hot water. The things we do and don't do. Then Cheryl Hyder's going to be spending some time with Dorothy Haraminac on cryptocurrency advisory brief. This is, obviously it's a hot topic in our world right now, and we need to understand how it affects valuation. And then she's also going to be doing this segment following that with the judges, and how technology changed how we do our job and that type of thing. And then we'll follow up with Michael Mulder talking about valuation verdicts, specifically Sonate, Corp, and Beyond Meat. And we'll finish up with Hubert, Klein, and Alina talking about mentoring and developing the next generation of services. So with that, let's bring on Janae. And Janae is a regular on the program now every month, taking us through lots of headlines, lots of things we need to consider in our job, in our career, in the work that we do, and where we can look further to go deeper with it. Janae?
Awesome. Thanks so much. All right. Well, we've got some great articles to go through, trying out some new formatting and things. So, yell at me if you don't like it. The first things that we're going to discuss are articles in the Mercer Capital publication, Value Matters, Complex Capital Structures and Transfer Tax Planning, Evaluation Perspective, as well as several quick read articles. The first, Discerning the Difference Between Audits and Forensic Investigations. The second is Your Deal Fair and Safe? When to Get a Fairness or Solvency Opinion. Also, CMS imposes a moratorium on home health and hospice enrollment, scope and legal mechanics of the moratorium. We have some brief items to touch on from BV Wire, including several appraisal foundation issues. TAF stands by contested language and USPAP brief. TAF clarifies position on contested USPAP language. The appraisal foundation seeks ASB and AQB board members. And then a couple of articles from IBSC on value uncertainty. So let's jump right in. Some questions that we're going to be answering, some issues that we're going to be highlighting. How do junior ownership interests create unintuitive valuation results? Why would I need a forensic analysis when my company has an annual audit? Fairness opinions and solvency opinions are valuable tools. And CMS aims to combat systemic fraud by halting new enrollments in 2 provider categories. Okay, so complex capital structures. The evolution of deal structures. The authors make the point, Lucas Paris and Sujan Rajbandri, that middle market transactions have shifted from straightforward cash and note purchases to being more commonly complex arrangements involving rollover equity, management incentive equity, contingent earnouts, etc. So This has the effect of bifurcating some risk as well as the return. Unlike, traditional structures where, all common equity holders are treated the same, complex structures allocate value and risk in a non-pro rata way. Senior classes like preferred equity prioritize downside protection, while junior classes such as profits interest focus on future upside participation and incentive alignment. So these junior equity positions are somewhat option-like, and they often derive their value from the potential for future appreciation rather than current intrinsic value, which means that they can hold significant fair market value even when senior liquidation preferences exceed the current enterprise value, seemingly. So this should seem unintuitive on its face, but because of those option-like features, this somewhat makes sense in the allocation between some of this risk and upside sharing, downside limiting. So because value can no longer be allocated, and there's an example that will make a lot more sense in the article. It's an easy article to get through, not difficult. It's a good article. So because value can no longer be allocated on a simple pro rata basis, using methodologies like the option pricing model, scenario-based methods, and Monte Carlo simulations are used to capture the non-linear payoffs. In these, the interesting point, the takeaway from this article is that valuation is no longer just a downstream reporting exercise, the authors argue, but a critical component of the planning process. So early involvement of valuation professionals is essential for defensible tax and estate planning. Perhaps this is a new niche for your practice. And that graphic was from the article. Discerning the difference between audits and forensic investigations by Eric Ringoen. These two articles appeared in the quick read from May 27th and June 24th. They highlighted the differences in two services that the public often thinks are interchangeable, but they differ. And in the ways that they differ include the primary objective and scope. A financial statement audit is designed to provide reasonable assurance that a company's financial position is fairly represented on paper and free from material misstatement. A forensic investigation, on the other hand, is a targeted examination of specific records to determine the facts behind a suspicion or allegation of fraud, including identifying the perpetrator, quantifying losses, and explaining how perhaps the fraud was concealed. Materiality is a big difference. Auditors are going to rely on a materiality threshold based on professional judgment or norms to determine which transactions to test, because they won't test each and every one. That's not the goal or the job of an audit. Forensic accountants, on the other hand, are not constrained by materiality. Their objective is to find any and all information necessary to develop investigative procedures focused on the alleged fraud. The composition of the teams, forensic investigations are often performed by multidisciplinary teams that may include experts in cyber investigations, computer forensics, data analytics, someone like Dorothy Haraminac with cryptocurrency, as well as former prosecutors or law enforcement officials. So there's a broad array of people that may be involved rather than maybe just auditing focused accountants. Okay. Evidence and reporting goals. The auditor's end goal is a standardized written report signed by the accounting firm expressing an opinion on the financial statements, whereas forensic investigations focus on gathering evidence that can withstand the scrutiny of a court of law, forensic. And forensic reports may be interim reports or oral reports. You wouldn't have those in an audit. To assist in decision making. The investigator must avoid, opining on a party's intent or guilt, leaving those determinations to the trier of fact. Okay, so good article, good two articles. The next one is your deal fair and safe when to get a fairness or solvency opinion by Todd Mitchell. Another article and perhaps a niche valuation service offering. I had the GPTs put together a graphic on key circumstances that might signal a need for these services. Consider this an experiment in process, evaluating merits, if any. Did it quicker than I could have put something like that, but maybe in the future, when I make a lot of money, I will have a real graphic artist do these things. Okay. The article discusses the benefits of both kinds of analysis and discusses the distinct purposes of fairness opinions versus solvency opinions. While both strengthen the decision making, they focus on different aspects of a deal. A fairness opinion evaluates whether the financial considerations in a deal are fair to specific groups. Solvency opinions, on the other hand, assess the company's financial health after the deal closes, specifically testing for asset sufficiency, ability to pay debts as they come due, and capital adequacy. So there are specific triggers for seeking an opinion. Fairness opinions are most valuable in deals involving conflicts of interest, related party transactions or insider buyouts, or complex valuations for high growth or volatile market companies. Solvency opinions are particularly relevant when a transaction significantly increases a company's leverage, such as an LBO, dividend recapitalizations, or large distributions. The characteristics of a credible opinion. A strong opinion must be grounded in independence, analytical rigor, and using multiple valuation methods and stress testing. It also has to have reliable and dependable inputs, meaning management must stay behind the forecast and assumptions used in the analysis. But you have to vet them. Okay. Importance of early engagement and in the process, engaging an advisor or evaluation analyst such as you early in the transaction process provides the most meaningful insight and support for a board. The process typically involves a thorough diligence phase and concludes with a formal presentation. So perhaps, again, another niche for you to consider. If you are involved in healthcare, this may be an important status update. The CMS has imposed a moratorium on home health and hospice enrollment. There's a nationwide halt on new enrollments. It began in May, and it's a 6-month nationwide moratorium on new Medicare enrollment for home health agencies and hospice providers. So the action is aimed at addressing systemic fraud, and it marks the most expansive use of this authority to date. So it's covering those 2 categories across the entire US. It's targeting systemic fraud. It was implemented in coordination with the Anti-Fraud Task Force, part of a broader crackdown that includes, intensified investigations, removal of providers suspected of improper activity, especially in certain areas suspected of significant or areas where significant fraud has been identified or is suspected. The moratorium, however, it significantly disrupts the mergers and acquisition scene because it's blocking enrollments that trigger a change in majority ownership under the 36-month rule. So asset purchase transactions are effectively frozen unless a buyer can operate without Medicare revenue. This is driving buyers towards stock and equity purchase structures, which allow for continued billing, but they carry the higher liability risks. And it may be driving increased valuation of existing providers that possess clean enrollment histories. So the competition to acquire these targets may drive up those prices or those valuations. There is concern over patient access. Despite wanting to, get rid of any fraud and waste, there are concerns that this could hinder patient access to care, specifically in rural and underserved areas where capacity may already be limited. Okay, so a number of highlights from the BV Wire. The Appraisal Foundation stands by contested language in USPAP brief. This is an update on that language and that discusses that or directs lay persons to seek appraisers that ideally follow USPAP. And it sounded like there was a double down on this language. Hey, we're not going to change it. Then about a week later, TAF clarifies position on contested USPAP language, saying, well, maybe this isn't final yet. So maybe let's watch back a little bit. We'll see. If you're interested in any of these details or getting involved in the Appraisal Foundation is seeking board members for the Appraisal Standards Board and Appraiser Qualifications Board. You have just a few days. July 24th, I believe, is the deadline for applying for those board members. But hey, let's get some good people in there. Also, the IVSC explains why two experts can reach very different values. We discussed in another paper, which was getting the process right, exploring valuation risk under IVS back in August of last year, about valuation risk. So if you're interested in further reading on the topic of value uncertainty, there's a link at the end of this presentation, and you can also get there by navigating through the June BB wires. It's an interesting concept. It's worth a read. I haven't read the second paper, but I intend to after this. The IVSC is also seeking feedback on this concept. The first paper, if you're needing that first paper, I'm happy to send that to anybody that's interested. That was a good, interesting read on value uncertainty. So that is what we have. As always, we have links in the back for all of these things that we've discussed. I will see you next month. Mel and Alina, let's get to the rest of this presentation.
Thank you, Janae, for your time and all the extra time that you dedicate to make sure that we have the best articles and we can look through them. So thank you for your time. And for everyone else, you have your first polling question. So make sure to respond to that. And now we are going to have one of our correspondents, that's Ed Mofrad, and he's going to be interviewing actually two members of the Leadership Initiative Board. They are going to be talking about engagement letters. So Ed, you can take it from here.
Thank you, Alina, for that amazing introduction. It's my pleasure today to be interviewing my colleagues, Glenn Block of Allentown, Pennsylvania, from Block and Allen, Aldinger CPAs, and also our other colleague, Ron Rudich from Maryland, Reisterstown, Maryland. I hope I'm pronouncing it correctly.
That's close enough.
It's my pleasure, gentlemen, to be interviewing you, and we're going to talk about a topic that we all are concerned about: engagement letters. And we're going to leave this meeting that much wiser about them. We all look at our engagement letters every once in a while and say, gee, this could use some trimming and whatnot. So Ron and Glenn are here to educate us about that. First of all, gentlemen, welcome. And I want to ask you, what do you mean by the three-legged stool? I've often heard you mention that. What's the three-legged stool?
It's the standard of value, the premise of value, and the reason for the valuation. As we well know, you can change a reason, and it's going to change the direction of the valuation. Materially. So we talk so often about standard of value or premise of value, but I know I'm repeating myself, but the reason why we are doing it could take many facets, be it a calculation or a conclusion for litigation, for a whole array of reasons why a business valuation is necessary.
All right. Glenn, do you want to add anything to that, or?
I think Ron covered that very well.
Pretty good. Now, we all know how important retainers are for professionals, but you guys go out of your way to make a very strong recommendation to the practitioners that they should always, always, always obtain a retainer. Why do you feel so strongly about that?
So retainers are a very important part of any engagement letter. Just to start off and give some background, Ron and myself, we actually just put out an advisory brief on engagement letter agreements, and that's going to be posted up along with the two other advisory briefs, the cryptocurrency and the AI advisory brief at nacva.com/advisory brief. And I think for all the members here, it would be advised to you to take a look at that, because much of what we're all going to talk about today is listed in those advisory briefs. But as far as the retainers, look, we work very, very hard to gain our credential. We spend a lot of money in education and getting what we need. And the one thing we don't want to happen is run into a problem where we don't get paid. So why do we have a retainer agreement? First of all, it demonstrates the client's commitment. The client will have skin in the game for any kind of engagement that they would do with us professionals. It also reduces collection risk, right? Because we're hired to do either a valuation report, a forensic report, lost wages and compensation, lost profits and damages. I mean, and in those contexts, the outcome is not always favorable. And we don't want to have a client base whether we're going to get paid or not on whether the report is a winning proposition for them or a losing proposition for them. So that helps also to protect the independence and avoid ethical problems, because we want to maintain independence and we don't want our report to be deemed as a contingent payment agreement. So a retainer agreement is very important. It should state whether it's refundable or not. Ron and I have some differences on opinion on that. He does primarily non-refundable. I do too in certain circumstances, but then we should also list our hourly rates and how we're going to get compensated. We should probably charge higher rates for expert testimony because that requires a higher skill set level. Include any out-of-pocket expenses in there. And also, it should, the biggest thing is that we should bill regularly. I find that if you don't tell your client or keep them up to current on their retainer, it presents problems. So the key to staying out of an issue with your client is to bill them regularly, and that way they're 5 days before you're going to court. You're not hitting them up for another 5,000 retainer. And one last thing, you should require replenishment of the retainer. And when I say require it, you need to have language in your engagement letter that talks about the terms of that replenishment. Not that it should just be replenished, but the terms of how it's going to be replenished and how many days from the time that they receive the request that needs to be paid in.
Got it. Some of us who started with little or no guidance back in the day learned that lesson the hard way. A lot of what you're saying goes straight through my heart. Believe me, I've learned my lesson, and I'm sure others in the audience have too.
Ed, I want to add a little bit to that.
Sure. I was going to ask you that.
All too often, we are being shopped. Send me an engagement agreement and what is going to be your fee. And then they use that in order to try and really get a lesser fee from another professional. So and what Glenn was saying, that I'm making mine non-refundable, and I'm going to quote Glenn about having a skin in the game. That's really important. Put up or shut up. We are very astute professionals. They're doing an excellent job. And we want to make sure that all parties agree, and so the process can begin. Also, I think a retainer is important because everybody deals with the numbers themselves, and sometimes our numbers are quite large based on the responsibilities that we are providing. And remember, our final bill is going to be much less than the total retainer fee in its entirety. And that psychologically is important as well.
Very well said. I totally agree with both of you. It could not be more important. And let me ask you something a little, maybe in a tangent. In case you do come across a situation where the client doesn't pay the final or is having a dispute with the final invoice, how do you normally go about resolving it?
You want me to take
that can be a very problematic. I had a case whereby I had a wife call me that she was going through a divorce with her husband, and everything is amicable, and he would pay the retainer fee. So I contacted him, he agreed, and he gave me a credit card and paid me the retainer fee. Then I went ahead and did my work and presented my final bill, subtracting obviously the retainer. and it was quite substantial. And she came back and said, well, I know I signed the agreement, but I don't have any money. I expected my husband to pay it. And you know what was going to happen next. I called the husband and he said, I didn't sign the agreement.
Oh, boy.
And I got stiffed
Oh,
for
no.
the fee. I think every contract changes in life when something happens to you. So another situation is I presented my valuation to a board of directors. And at the end, I turned to the president and I said, according to my engagement agreement, I am to be paid because I delivered. He said, oh, I'll be in a week or 10 days, I'll be sending you a check. I got up and walked around the room and started picking up all of the valuations and putting them back in my briefcases. And he said, what are you doing? I said, I expected a check. I'm taking all the valuations back. He immediately called the secretary and I got paid.
Oh,
So it's important that you have in the contract, you're not going to deliver until you get paid.
Let me just also make a quick comment about that. In the course that Ron and I are teaching, actually a brief version of it today, later on between 4 and 6 o'clock right here on AVW, but
Right.
also at the National Convention in Salt Lake, we really dive deep into exactly what you talked about. I have actually a case study and things that we'll present in our course that show exactly what to do in a case where you don't get paid and how to go about it and how to prevent it from happening in the first case. I can actually, if you will, I have a little bit of bragging rights here. I've been doing this since 2000 and I've never been beat, not even a single time out of a fee. But as Ron says, every one of these nuances comes up, changes my engagement letter. My engagement letter is like a piece of art. It changes almost on every engagement because I always look at what I learned from the last instance and try to cure it in the next engagement letter.
And Ed, to parrot what Glenn is saying, I started in 1999, so we're about the same age in this. But I think my engagement agreement right now is about 12 pages.
wow.
Okay, you would not put a new roof on your house unless you had to sign a contract. How many contracts do we sign in life? This is a contract which is going to state, client, you are responsible to provide me with this list. Primarily, I get it, legal documents and maybe even titles to assets, but also financial statements that we can rely upon. And in so doing, we are then saying we are promise to use technical methodologies that are approved based on our education and experience and we are going to comply with, going back to your first question, the reason for the valuation. And we both sign it, then that gives us the strength in a document which is going to read also if you happen to want to sue and pursuant to that, you want to have something in the contract that says if they feel that they need to sue for any reason, they must pay their bill first. Again, with all the skin in the game. When you go to internal revenue, you want to go to tax court, you got to pay the tax first. We should
Sure.
be paid first as well.
Let me echo something that Ron just talked about because he and I share engagement letters with each other, engagement agreement letters, and mine's similar to his. I have a very long and lengthy document. So one of the questions you may have is, well, what do you do when you get a client who reads your 12-page document and starts taking exception to certain provisions that are in that engagement letter? And you know what I say to that? When that phone call first comes in, that they're looking to hire you, that's when you got your greatest leverage. There is no better time to lever your client at the time the phone call comes in there because they're needing your services. And most likely you were referred to by another attorney. So what you want to do is, all I do is tell my client, look, my malpractice insurance carrier requires these things to be inside my engagement letter. And that
Right.
always shuts everyone down. I've never had a problem with that.
Absolutely, that never fails. Always blaming that insurance carrier, and it always works.
Well, it's funny because pursuant to that, just last week I had some a partner in a law firm who was representing the client, and she wanted to make changes, and I said respectfully, then get another valuator. I'm not
Well,
changing
it's
I'm
very
not
nice when you
changing.
can do that. It's nice to be in that position, that place in your career where you can actually turn a client away. That's wonderful. Let me ask you this. We always, you talked about how you add pages and, rules to your engagement letters, but no matter how many items we add to our engagement letters, still when a new client comes up, there's always a question: should we make a tailor-made engagement letter or go with something we already have? How do you resolve that question?
I think with both our experiences, we've had different types of uh, engagement agreements, both for litigation and non-litigation. And it could be for all, going back to the very reasons why a business valuation is required. So both of us over time have set up a body. I think I have about a dozen different basic valuations, engagement agreements that I have that I can immediately go to. So if I'm doing a consulting engagement, and I caution everybody, do not lump everything into one engagement agreement. Because if you are preparing consulting work, you're not preparing a valuation. And you could be doing multiple types of consulting work, particularly when I'm dealing with bankruptcy, before I get to write the valuation report. Don't lose sight of that. There are different segments, different types of work, and it makes it easier to go back to our library as a starting point. Once we talk to the client, we're able to expand that engagement agreement to match the work we need to do.
Uh, Glenn, do you have anything to add to that,
Yeah,
or
I
do you?
mean, again, to Ron's point, I think every engagement letter stands on its own. As I mentioned earlier, it's for me like a piece of artwork because no two are identical. I think it's important to understand the scope of what you're trying to do within the engagement letter. And for example, what are we doing here? Are we doing a conclusion of value business valuation? Are we doing a calculation? One may fall under SSVS1, one may not. So to Ron's point, you have to make sure you put your ducks in the row and make sure that you get the right language in those engagement letters. We go over all of this in our course in great detail so that the class participants can see the differences between the types of engagement letters and what should or should not be included in the engagement letter.
And
And
one
what would
more,
it?
I'm
I'm
sorry,
sorry,
one more
Adrian, go ahead.
point to that. If you use a canned engagement agreement, you're going to absolutely miss something very pivotal and very important to that engagement.
And we can't have a discussion in 2026 about anything professional without talking about the great mighty AI. Um, how do you engage with AI? And I suspect most of everybody is these days. And then how does that intermingle with presentation of engagement letters?
Well, that's a great question to ask. And again, I think I alluded earlier to the fact that NACVA has put out an advisory brief on AI. It was done through the AI Machine Learning Commission. That was put out in October of 24 in the first round. It was reviewed and ratified again in May of 26 because AI is a forever changing thing. And so they wanted to take another look at it. But the main thing with AI and NACVA's position on it is that you're not mandated to disclose it. You're not mandated. However, there are other important things to understand that go behind that. For instance, AI is a tool. It's not a substitute for professional judgment. One of the standards, of course, is that you have to apply professional judgment. And the number two, the important disclosure is the underlying information relied upon. So if you're going to use AI, you need to be able to back up the position, or at least do your homework, that whatever you've done on using AI, that you can rely on the sources if you're questioned on it. And, probably in answer to your more direct to whether it should be included in an engagement letter or not, because that's really what we're talking about here. I include this in all of my engagement letters. And the reason for that is so that my client has an understanding that we are using AI, because they may object to it for multitudes of reasons. There could be confidentiality that they're concerned about within the business valuation report if we're using some of their data to go out and look at AI. So in any event, we want our client to be aware of, or at least tell us whether we can or cannot use AI. And I think that puts us in a better position to defend our matter in case it comes up later on down the line. Also, please understand that regardless of whether you use AI or not, our professional standards remain unchanged, right? We're still subject to all of the 9 or 10 different things that we as experts are required to do. So the bottom line is, I kind of think if I'm going to use AI, I would probably, my recommendation is to disclose it, be upfront about it, get it out there in the report. But if you're not going to disclose it, at a very minimum, you better have the data to be able to back up what you're saying in your report.
And
Okay,
not
go
only
ahead, Ron,
that, the
please.
research that is legitimate data. I would suggest very simply, I would make sure I have a footnote on the page where I've used the AI, and I would also put a note into the assumptions and limiting conditions.
I have so many other questions to ask you. I mean, just about AI, I have several piggyback questions to ask you, but we're out of time, and we don't want to get these people angry. So we better, as pleasant for me as this conversation is, we need to end it here, but I cannot wait to pick up on this at some future opportunity. Thank you, Ron. Thank you, Glenn. Thank you, gentlemen.
Thank you.
Thank you
Thank you,
very
Ed,
much.
Ron, and Glenn. Great conversation. It's so huge, and we kind of take it for granted as this little thing. And I agree. My engagement letter has morphed over the years. So usually
you
because
very
of my
much.
screw ups. So awesome. All right. As we move in to the next segment, we have a break. Are we going to go to the shift, Chanda?
Yeah, just really quickly, I was going to
Yep.
mention the AVW in-depth webinar.
Yep.
With Ron and Glenn. They'll be joining us later on today for the engagement agreement letters AVW in-depth webinar. So if you're interested in more information on that and would like to register, there is a link, nacb.com/AVW in-depth, or you can scan that QR code that's on the screen right now to join that segment. And also in August, we have another AVW in-depth webinar, sports valuation, expanding the practitioner's toolkit. In addition to that, I just want to do a quick reminder that our conference is coming up in October. So if you are interested in joining us, either in person or virtual, please scan that QR code there. October is a great time in Utah. In the fall, so the leaves may be changing colors and everything like that. So hope to see you all there. And with that, I'll turn it back over to Mel, who will get us started with the next segment.
Thanks, Chinda. I'll be there too live. So it'll be cool to see people's faces again. So, all right. Our next segment is with Cheryl, Hyder, and Dorothy Haraminac. I hope I said that right. And if not, shame on me. But talking about the advisory brief around crypto and in cryptocurrency and how we deal with some of those assets. So Cheryl, I'm going to let you introduce your guest, introduce the segment, and take it on from here, because I know we have a lot you want to cover. Cheryl?
I know she's here somewhere.
No, I'm not here at all. All right, so
We see all kinds of stuff on your desktop right now.
you do, huh?
Yeah,
All
I
right,
think
let me
you're
do
in
this
presenter
one.
mode. Yeah, just flip
There you
it.
go.
Now we see you.
Now you see me.
Yeah.
Should see that. Okay. Now we should be pretty good there, right? All right. So sorry, y'all. It's been a while since I've been here. So Dorothy and I are going to talk to you today about this advisory brief that Glenn just talked about a few minutes ago. And this is going to be one of those things where I don't think any of us are really as smart where this stuff is concerned as Dorothy would be. So Dorothy, we're here to talk about this advisory brief. And my question for you is, how did you get rolled into this? Let's start there.
How did I get rolled into this?
Yeah.
Oh,
Meaning
well,
this
I mean-
advisory brief. Start there first.
yeah. Well, I mean, NACPA works very hard to get really useful information in front of its members. And I happen to be involved with NACPA and have been for a very long time, but I'm also now the foremost crypto tracing expert in the country. And so this advisory brief is really the product of what can we condense down for practitioners to know about cryptocurrency. And there's three different advisory briefs up right now. One's on AI, one's on the retainers, and then one is on cryptocurrency. And the crypto one is really just what is the minimal amount of information that you need to know before you take on a case where cryptocurrency is at issue. And that's true in forensics and in valuation. There's a little glossary in there that you can use, and it really hones in on a very basic background, but also what you're going to see when crypto comes up. You're going to see records. Records exist beyond screenshots. You're going to have to verify those records, and you're going to have to verify what your client is telling you, because what's weird about cryptocurrency is that, with cash and with companies and entities, you see records, you see their pitch decks, you see the K-1s and the tax returns, you see bank accounts, you can get information for that. In cryptocurrency, you can have very complex financial instruments buried on public blockchains. And so what I hear a lot is like, I don't bother with learning much about crypto because it's just, market price times quantity. That is a huge, huge misunderstanding. There are over 30,000 different cryptocurrencies running around over 100 different blockchains, and some of them talk to each other. So those are definitely not all just market price times quantity. You really have to look at who owns this, who the subject is. Is the subject also the issuer? Are they involved in these complex things? If they are involved in these complex things, are they telling me the truth about it? It's relatively easy to verify once you have a little bit of background knowledge. And that's what this advisory brief is really trying to establish. Like, you need to know how to talk about it. Here's how to talk about it. And then NACPA also provides courses on the details behind it. Once you learn how to talk about it, now how do you analyze it?
So you came out of the box there like firing on all cylinders, girl. I love it. Yeah, so we've got up on the screen here the details of, basically the outline of your advisory brief. What I want you to do for the next 18 or so minutes is just take us through section by section for the major sections.
Okay.
You set pen and pencil to paper, whatever. But I get that the main difference causing variance in protocols is that the records are online, right? As opposed to they could be here, there, or anywhere.
Yeah.
But talk about for a minute the fungible versus non-fungible nature of this currency source. Because, we've all heard cash is fungible, it doesn't matter. Is that
Sure.
really true here? Talk to me.
Well, I mean, it's not really true for cash either, right?
Yeah.
Think about cash. If I'm a upstanding citizen, haven't really been involved in many crimes or whatever, minor shoplifting, maybe whatever, then my cash is fungible with pretty much every other upstanding citizen. But if I'm a bank robber, right, my cash is no longer fungible because cash has a serial number. It has a transaction history. The transaction history for dollars just isn't public like it is for cryptocurrency. But if I go try to spend the cash that was used in a bank robbery, I'm going to go to jail probably, or whoever is trying to spend it is going to get questioned at the very least, because cash is not as fungible as everybody would really like to think it is. That's part of it. Cryptocurrency is fungible to a similar extent, except it has a history. Every token that's involved, that's sitting in somebody's wallet, has a transaction history behind it. And so in that sense, it is at least as much as fungible as dollars are, if you kind of ignore the transaction history. But that's only true for some tokens. There are also other cryptocurrencies that are non-fungible. And that means that this one asset that I have is completely unique. It's like a painting, right? Art is kind of the main thing that NFTs take the form of. There's another one that's being used a lot, which is your right to access a future flow of income. Sometimes complex financial instruments like DeFi yield products and stuff like that are issued in the form of NFTs. So if you're holding that NFT, it entitles you to a future income stream. That's important to know because what it looks like when you view it on some explorers is just, kind of random string of numbers and letters. So you have to know what it is and what it does. The art displays a little bit more easily. The other thing that can be stored as a non-fungible token is something similar to a website, right? Right now, NACVA owns nacva.com. And when you type nacva.com, some things display. What's going on in the back end is the internet. And what really is happening is that those letters are being converted to numbers, and whatever's being stored at those numbers is served up on your display. You can have a similar thing for crypto addresses where I can type in nacva.eth and get a crypto address instead of a website. And so you have this blockchain name service happening, you have yield products happening, you have art products happening, and all of those are versions of non-fungible tokens. And how you differentiate between them is going to depend on what tool you're using to look at it. If you have a client who's saying, oh yeah, this is all I have, great. You need to look at what they have in a public explorer to verify that what they're telling you is relatively accurate.
Okay. And when you talk
Is that
about
too much? Did I get too far?
we're all drinking through the fire hose. Question. When you're talking about blockchain forensics,
Yep.
explain to me what you mean. Because, just like we heard in an earlier session that, forensics means A, B, or C. That may not be the same definition as other people use, but blah, blah, blah. So in your view, what is blockchain forensics?
In my view, it's really just what the words mean, right? Blockchain is a thing out there. It's a new type of technology. There's a bunch of different varieties of it. Like I said, over 100 different ones right now. And that grows and shrinks every day. And then forensics is really the meaning of that word is a thing intended to be presented to a trier of fact, right? Usually you think of that as judge or jury, but it can also mean mediator or arbitrator. That's really what it is. So if you're involved in blockchain forensics, it's going to have a little piece of financial forensics. It's going to have a bit of valuation. It's going to have digital forensics. It's going to have some open source intelligence skills rolled into that. Blockchain forensics is any dispute, the analysis involved in any dispute intended to be presented to a trier of fact. And so you need to prep all of your report in a way that keeps all of your basis, the evidence that you're using for your basis admissible. You can't just go like pretend to be somebody else and get all this information trying to use it. There's a lot of rules around how to present something to a court. And those depend on not just the industry itself, but those are going to depend on the jurisdiction. The rules around how you present something in Texas are going to be different from how you present something in, I don't know, Montreal.
Okay, I'll take that. In case anybody's getting worried, this is like a high-level summary of the advisory brief, which is covered in part. We're going to talk about where you can find out a whole lot more about this when we get to the end. So don't panic. You're not left out in the cold here. But Dorothy is going to talk to us for a minute about the standards and how you have to adjust what you're doing, if you have to adjust what you're doing for, discovery purposes and so forth.
Yeah, you really have to do a little more verification work on crypto, whether or not you're hired by the crypto spouse, the non-crypto spouse, or the entity who's got crypto on their balance sheet or using crypto in their operations. You just have to do a little more verification to make sure that what they're telling you matches the implementation, because the implementation is public. It's very easy to verify. You don't just take somebody's word for it. That's a big part of it. The advisory brief is, despite what my rambling would indicate, it's only 5 pages long. Right? So it's not very long. And one whole page of that is the definitions. They're simple litigation focused definitions so that you can use those and say, hey, okay, this is my set of defined terms. Now I'm going to ask you questions using these defined terms. So if you don't look at anything else in that advisory brief, look at the definitions, understand what those words mean, and then start using those words when you're asking questions about those things.
Yeah, that includes your definition of non-fungible cash, right? Which personal favorite in there. Think about the bank money that gets the red dye spewed all over it.
So I don't differentiate between a non-fungible token and any other kind of token in those definitions, or rather NACVA doesn't in its advisory brief, because it isn't like my personal advisory brief, right?
No. I'm saying that the non-fungible currency, not token. So
that one, so I mean, same thing. The coin, token, the currency, whatever currency kind of has its own special meaning, but in the set of definitions in the advisory brief, there is just the word cryptocurrency, and that's inclusive. It's a broad term to pretty much mean anything that's trading around a blockchain. And so eventually, when the US dollar becomes its own stable coin, then the US dollar would also fall under cryptocurrency, which is something that they're actually trying to do right now. Right? That's one of the acts that's before the one of the houses. I don't remember where it's at right now. But that's one of the things where you're trying to make stable coins this registered thing and trying to issue US dollar on a blockchain rather than how it's currently being issued. That's, I mean, it's not right now today or even this year, but that's something they're trying to consider. That's how broad the definition for cryptocurrency is. And that definition comes out of like the original IRS revenue ruling back in 2014. You know, the broad definition, and that's it. Getting into the weeds about, well, is it a token, or is it a coin, or is it a utility token, or it's a waste of time. If it's traded around there, people are using it to buy and sell things. You're connecting to it using public key cryptography. It's probably going to fall under that definition.
Okay, so one of the biggest takeaways I had from this, other than I feel like I know nothing about what I do for a living now, thank you very much. But I feel like one of the biggest areas where we all need to get smart is discovery, because the attorneys are going to say to us, what do you mean you don't have what you need? And they're going to say, write it down so I can put it in my motion. I'm just going to pick up and drop your wording right in. How do you suggest we deal with that? Do we need to go to court with the attorney? What do we do? How do we get them up to speed?
You have to get familiar with what these records look like yourself, so that you can explain it to the attorney, right? So you need to familiarize yourself with what exchange records even look like. If you have a Coinbase account, what do those records look like? If you have a Kraken account, what do those records look like? Binance, KuCoin, BTCE, remember back in the day? Like, just so many different exchanges are out there. About 100 or so are based in the United States. And now even your traditional financial institutions have a crypto component. Schwab is issuing notices like coming soon, crypto. Like, what could possibly go wrong with that? To everybody. So your traditional financial investment accounts are going to start offering this asset. That'll be a little bit more limited than what the full-fledged exchanges offer, I think, in the beginning. But you've got exchange records, you've got wallet records, which is where a third party is not controlling your access. That's a person created it themselves, and a person is controlling their own access. Records exist for that beyond screenshots. So you need to familiarize yourself with what a wallet is, familiarize yourself with what an exchange is, and familiarize yourself with what records look like from both. The advisory brief touches on those things and kind of specifies how you get records from wallet software so you can be satisfied that they're complete. And the same with exchange records. The third component of that is verification. You have to verify those. You don't really do that so much with bank records, because you've got the bank statement, it's got your beginning balance, it's got your ending balance, it has all the transactions that got from the beginning to the ending, and they're self-authenticating on the math side, right? But if you've got a set of bank statements and they look a little wonky and some of the lines are crooked, but not all the lines are crooked, then you're going to be like, what is happening here? And you might add all those transactions up to make sure they match that beginning and ending balance. And if they don't, there's an issue with the records. You have to do the same thing with crypto records and ensure that the records you got from the exchange are complete. Do the beginning and ending balances match? Exchange records don't often have a beginning balance, they only show you the ending balance. So that's hard to do if you've got records for only a short period of time, like a short marriage or something like that. So verification gets a little bit harder in records. It's relatively easy with wallet records because most blockchains that you're going to come across are public. You only come across the private permission chains in relatively rare instances, but those are also kind of increasing. But people are leaning towards more privacy focused ones. But for the most part, it's relatively easier to verify wallet records than it is to verify exchange records. But both of them need to be verified, and that is also mentioned in the advisory brief.
Well, but I think you and I can arm wrestle later about this, but I think in any case, whatever data set we're looking at, we have to make sure it's good data, garbage in, garbage
Yes,
out. So,
absolutely.
I think that's the same holds true here. Maybe I'm wrong. I don't know.
No,
But
I
it's
think
just harder to do that here, I think.
I don't think it's harder. I think that when you get bank records from a bank, you're relatively assured that they are complete, that they have responded to that subpoena with the most complete records. Crypto exchanges don't do that. They don't really understand their role as much as well as banks do. Like banks argued for the Bank Secrecy Act back in the day, right? So they understand the trade-off. The trade-off is we let you have a bank and you do some work to monitor the transactions. And if you accidentally, I don't know, process a bunch of payments for ransomware people, then we'll forgive you if you turn over the records when we ask you for them. Crypto exchanges don't really understand that that's the trade-off. And so what will happen when you ask them for records is that they'll respond with objections like they're a party to the case, and that can get a little weird. Like, hold up, let me explain your role to you again. You're a third-party account provider, and this is, while it says request in the document, it's an order from the court to provide records. And so you have to get a little bit, you have to push back a little bit to make sure that you get all the records you need. It's relatively straightforward, and it's the same underlying technical skill for verification. Right. Do the transactions equal the difference between the beginning and the ending balance? That's the same math, and where that data is what changes.
Okay. Speaking of math, let's talk about, I know it's your favorite topic here. Let's talk about professional judgment for a moment. So we've got transfers that are occurring from point A to point B, and some people, I've seen a lot of cases where some companies are solely transacting in electronic currencies, cryptocurrencies, if you will. So when I have a case and somebody says, well, okay, I'm getting 50% of the whatever coin from my former business partner, help me receive it and put it wherever it needs to go. I'm going like this and say, nope, not me. Not it. What are you saying? How do you do that?
Well, it's harder to do that because you're not taking custody of the assets, which is the real, barrier to transfer assistance. Right? Past, if somebody's asking you to transfer $1 million for them, you're taking the custody of it. You're functioning as the escrow agent, and that's not something that a forensic analyst or valuation professional should be doing. Right? That's a whole other situation. Different insurance, different kinds of things, different kinds of accounts. With cryptocurrency, you can assist a person in so much as you can explain how this stuff works. Right. A person maybe they agreed to taking something in kind or without really knowing what that meant. And now they've got to do it. And they need your help to get familiar with the functionality. Right. That I think is something that you can help with. I don't think you should do it for them. And I don't think you should tell them exactly what buttons to press. But I think you can say, look, this is where you figure out what wallet software you're going to use. This is how you figure out what exchange you want to use. These are the options that are available to you. These are some of the considerations you need to make. This is, in general, how this process is going to work. And then they are going to have to do that. If they're not comfortable doing it, they shouldn't be taking the crypto in kind to begin with. And that's a big part of it. And that there are some people that are financial advisors and some others that are licensed to do that kind of thing that do maintain familiarity with crypto. And some of them are completely specialized in crypto. But the forensic expert, in my view, should not be taking custody of an asset, just like you wouldn't for dollars, and holding it in trust or anything in any more of an aspect than they would for dollars or any other kind of asset. It's very tricky because I get asked this a lot. Well, you can help me, right? You can tell me how to sell it or when to sell it. No, I cannot tell you when to sell it. That's not a thing. That's the kind of help they're looking for.
Wait, so when someone asks me, what do I do now? I got half of this. I can't just give them your number? Because that was my plan, and I'm being dead serious. Is that a no?
You probably shouldn't. I think you might have to assess that on your own service. Like, what do you do with this? What should you do with it? If your answer is I would sell it, that gets into the realm of financial advice, and you might not be giving them what's best for their position. Especially right now, prices have dropped substantially from a few months ago. You have to make a lot of considerations for that person's, risk profile. And that's
No, I'm saying literally, Dorothy, I'm giving them your phone number.
Oh, my phone number.
Your phone number. Can I do that?
I mean, you can give them my phone number. I can probably point them to other resources or assess if, are they really just looking to see how to push the send button and how to push the sell button, or do they need like a full scale asset management? Yeah, you could probably still do that.
Perfect. All right, I see that the boss is here, so I'm just gonna ask you for your biggest piece of advice. I've got a bunch of other points here on this slide. This isn't by any chance everything that's in this 5 pages or so. It's a very dense document, dense reading and so forth.
Yeah.
But I think what here is your biggest point?
The biggest point is recognize that NACBA is issuing these advisory briefs before any other organization is doing it. They're at the forefront of advising their practitioners. And so the fact that cryptocurrency exists as an advisory brief should tell you it's not going away. It's important to learn about. You need to go learn about it. That's the first thing. The other is the fact that traditional financial institutions are adding these assets to regular Joes means you're going to need to ask about it on every single case. There is no way to say, oh, this person might hold crypto or they might not. Do they have arms and legs or remnants of arms and legs? Then they probably hold cryptocurrency, or you should at least be asking about it. Like those things, there's no way to say that age doesn't work. Like the people who are most involved in this are over 50. And so all of these preconceived notions about who would hold it or doesn't hold it, you have to drop those. You have to go learn about it, and you have to ask about it.
Okay. So the boss is here, like I said. So I've got 2 more things to share with people. Number 1 is, as I've told you before, Dorothy is the bomb. She's got everything there is out there in her head about cryptocurrency and other electronic stuff. And she even put out a book recently. Woohoo, Dorothy. It's available on Amazon, right? I don't know if it's available on your website, is it?
I think NACBA may also be like doing some stuff with that as well, but it's very large. It's almost 500 pages. It has some forms in there. It has a lot of different methods and processes in there, frameworks and stuff. So it's a lot. It's 10 years in the making, I think.
So the key word here is comprehensive.
Yeah.
I have a different word for it, but I'm told not to use that word online. So I'm just going to tell y'all that if you want more information about it, there's a couple of other objective sites that I found with information. Dorothy will probably say, oh, I've got 15 others you should use. Once again, Dorothy, thank you so much. I'm going to kick it back to the ivory tower. Thank you so much. We will catch up.
Thank you. Thank you for having me.
Okay, always.
Thank you, Dorothy, for being with us. And I guess I do the same as Cheryl. Whenever it's too complicated, I will refer clients to Dorothy because she is amazing. And apparently today is the day for all the members of the Leadership Initiative Board to be in with us. So Cheryl is going to be interviewing the judges, but before that, Shanda is going to be talking about 30 under 30 so she can have time to drink water or do anything else in between. Shanda?
All right,
Grab
thanks,
some
Alina.
alcohol. Sorry.
Really quick, I just want to do a quick reminder. We do have our 30 under 30 recognition program nomination form open. The nomination deadline is the end of this month. So if you have somebody who is under the age of 30 who you want to recognize, who has gone above and beyond in the profession, please scan the QR code there, or there's the link on the screen right now for you to submit that nomination. And also, just another quick reminder, we do have the AI resources and webinar series page there. So if you want more information, visit nac.com/AI or scan that QR code. And I know we're running out of time, so let's go ahead and transition to the next, I think, go back to Alina or Cheryl.
Oh, look at that. You're coming back to me. All right. So why is this deck being difficult? All right. So I'm going to put this guy up. There we are. And we are lucky to have with us four judges here. One of whom I've not met yet. I have not had that pleasure. So we're talking about, that's Judge Adams out of Delaware. She's got a ton of experience in the complicated courts coming out of Delaware, which tells you something about her. Because as we all know, that's pretty much where people are going to look first if they've got a business dispute. We've also got with us today Judge Driscoll, and we've got, well, Judge Platt's not here. It's okay, though. I really wanted to pick on him with his business technology case management, but we'll have to hold that. And we have Judge Yates joining us. So the reason that I wanted to come back and talk to the courts, the judges rather, on the heels of talking to Dorothy, is really simply because we've had so much technology changing the way we do things, right? You might hear a high school kid or a freshman in college saying, I don't want to use AI, blah, blah, blah. You know what, dude? If you're using a computer, you're using AI. What do you think that software is? Dorothy, don't correct me. Anyway, so I'm just curious how these latest seismic shifts have impacted what our judiciary does on a daily basis. Anybody? Where you at?
Sure.
Well,
I
I
mean,
want to start with the challenge that people are looking at Delaware first. All right. So worker says, wait a minute. They go to New Delaware if New York is too busy that day. But I'll defer to Judge Adams at the beginning.
I don't know. Sorry.
Sure. So I always say it's sort of interesting. I think that I have been using some sort of AI ever since I was a law student and a young lawyer with Westlaw. I think that, with the terms and connectors was probably an original sort of form of that. And now Co-Counsel, which is the Westlaw AI sort of question and answer, is a form of AI. We have our Delaware Law Commission on Law and Technology, or some other formal title like that, is looking into having some more AI related type rules. I believe the Supreme Court of Florida has just instituted some rules, basically just saying you have to say if you've used AI or not in terms of this. And actually, Vice Chancellor Will from the Court of Chancery, just last week, you may have seen, that was on Law 360, issued a rule to show cause. And then a prominent law firm in Delaware had used an internal AI software to generate a brief with inaccurate citations. And another side had called them out on it. And they had sort of doubled down on it. And anyway, she issued a rule to show cause, and affidavits have been filed, and she has not issued a decision yet as to whether or not there's going to be sanctions. But, and while if somebody else starts speaking, I'll look up the case, but it's just an interesting topic that's come up recently.
No, that happened, I think, back in March also. I forget where that was, because I remember reading that case and snickering, saying, you gotta be kidding me. Judge says, hey, correct your stuff. You correct it. You don't say, oh, no, I'm right. That's like, respectfully, is that not
Yes.
stupid?
So it looks like the case is called Kevin Leiske, Leiske versus Kidd, KIDD, and it's 2025-0426. So it was originally in front of a magistrate on an advancement case and then was assigned to Vice Chancellor Will. So if anybody's interested, they can take a look at that. But I know in general, our whole Commission on Law Technology is looking at whether or not we need to have formal rules. My guess is probably yes, but like you said, AI is not going anywhere. We need to embrace it. You know,
Right.
can't just put our head in the sand about it. And it's been good for me these last couple of months to be involved in this because, you know, I haven't seen how the sausage was made in 7 years since I was a practicing lawyer, like having to deal with expert reports. So it's interesting to see how much the technology has changed and how AI is being used in terms of expert valuation. So I know you guys like to hear from us, but I also really enjoy hearing from you about it as well.
Judge Driscoll, go get her.
So
Sorry,
first time out. Don't beat up on her. Oh God, no. God, no. I love technology.
She went to Widener Law. She's tough. Come on now.
Yeah, that's right.
She's very tough. She's very tough. And you should see her on the golf course. She's really, really good. Really good. So a couple of things about technology. You know, what are trials? And many of you have heard me say this before. Trials are still telling stories around the campfire, which is something we've been doing since we were Neanderthals. And so we still have to be interesting. We still have to keep somebody's attention. We still have to tell a story. We still have to have a theme. Occasionally, we just use some cool words to express our thoughts. So whether our report or your reports, whether it's counsel's arguments, whether it's our decisions are generated by our own cerebral cortex or by anything else that we use as an assistant, the basics of what we do, I think, are still the same. And I've been cleaning out my basement. I'm going to turn 60 in November, and that means that everything changes. And among the things is that my wife says, you got to get rid of all that junk in the basement. She may have been a little more colorful than that. And so among the things I'm doing is sorting through my record albums from the 70s and 80s, my cassettes from the 80s, my CDs from the 90s. And I'm realizing it's all still just music. It's all still memories. It's all still a beautiful sound. Maybe there's a scratch in my LPs. Maybe there's a little skip on the cassette. Maybe the CD sound a little tinny, but it's still, you know, Batted to Hell by Meatloaf, one of my favorite albums. It's still, in whatever form I'm listening to, it's still there. So I think we do need to embrace technology. As Judge Adams said, it's not going anywhere. Right. But none of us are going anywhere either. There's the basics of what we do in a courtroom, whether it's lawyer, whether it's witness, whether it's expert witness, whether it's judge, is still basically the same. It's just how we get there is different.
Right. So we've got Judge Yates. You missed some of the jostling here. So excuse me. Good to see you.
Well, I'm a non-combatant. I'm in Michigan. We don't claim preeminence. We just do the best we can. Let me just offer a couple of thoughts. On my ride down today, I was listening to CNBC, and they were expressing the growing concern that AI will never produce the return on investment that everybody expected. And one of the segments they indicated would be the least productive in terms of return on investment is the legal profession, because they said there have been so many mistakes along the way that everybody's now terrified of making the mistakes. And so there's been this odd retrenchment. I mean, certainly Judge Adams is correct that we've all done online research since we were baby lawyers, and that's something we're all comfortable with. But both the risk of uploading information that's attorney-client privileged and potentially giving up attorney-client privilege, and then all these problems with hallucinated citations has made everybody, not everybody, but most people gun shy. I still find it valuable for background information, particularly since I've left the bench and I'm contemplating all sorts of aspects of practice. It's amazing how helpful it can be to generate a first draft of an expert cross-examination or a first draft of some questions during voir dire. So I'm still a big believer, but boy, the profession's getting very nervous.
Right. Judge Adams, I've got your back on this. All right, Judge Yates, explain to me how it's possible that we have the same types of problems occurring month after month after month, sometimes in the same courtroom.
It is absolutely baffling to me. I just do not get it. You know, the first couple instances where there were hallucinated citations in important briefs, we all gasped and we thought, boy, there, but for the grace of God, go I. At this point, you just want to pound people over the head if they're still doing that. It really is incomprehensible to me how this is still happening.
Exactly.
Or is it? Or is it though? Because lawyers are busy, right? And Judge Yates, you know that now far better than Judge Adams and I do. I haven't been an advocate in 23 years. But it's still the same. People still stand in the same place. The judge still sits in the same place. So lawyers are incredibly busy. They're being asked to do so many things, and they can do those things. And now they're doing those things. They're multitasking. And of course, my mother told me multitasking means multi-useless. But maybe what's happening. The one AI hallucinated case I had was out of lawyers just trying to work hard. Lawyer on a Saturday is at his son's Little League game trying to compose a brief to bring to me on Monday. And, in the middle of balls and strikes, there is the hallucination. The other lawyer caught the problem at his daughter's lacrosse game the next day. And I said to them both,
youth sports so valuable.
Stop working when you're at your kid's game. Your kid wants you there. So I think it's just a reflection on how busy we all are and the demands on our time in any service profession. That includes the profession that all of the folks on this call are in, and the profession that we're in as judges, the profession that Judge Yates is now in as a practicing attorney.
All right, that's a beautiful lead-in, as usual. I owe you. So I think you guys may or may not have seen this quote. Came out in 2017, before we get to the elephant in the room. Back in 2017, Yale published something online saying that we're going to have some major black box problems. For my profession, not much different than what we heard or saw. Well, the computer said it's true. Okay. I had a case where opposing experts said, well, the algorithm said it's right. And so it's like, with this stuff in the background and knowing that we're going to have all of these misperceptions and black box dangers and so forth, how do we move forward intelligently from this, other than having 5 more staff people just checking sites? Go ahead, Judge Driscoll.
I've been talking too much. That's what I was hoping we'd hear from the expert, Judge Adams.
Oh, no.
No. I got her back. It's up to you. I'm just messing with you guys. I'm just messing with you.
No, I made it up.
But on the black box problem, that has been something that's been highlighted. Yes, Professor Roth highlighted it in her piece in 2017. The courts, in grappling with that, have grappled it often in the criminal law context. For really? A bail matrix that's it's supposed to gauge the risk of recidivism. Is that violating due process, and is the defendant entitled to discovery on that? And the courts have essentially uniformly held, no, you're not going to get the secret sauce. And the reason is that it's not the secret sauce, it's the use of the secret sauce and how you're explaining the secret sauce. So I'm not as much of an alarmist about the black box concern that Professor Roth articulates, because to me it's all about, again, who's on the witness stand explaining what that secret sauce is and saying if it makes sense. That may be an overly simplified view, and I'd love to hear a dissent from Judge Yates or Judge Adams, or a concurrence. I'll always take that. But that's a view that I've had for quite some time.
I'm going to agree, and for this reason, it seems to me that ultimately any professional is responsible for the product that goes out. Any tool you use that helps you produce the product is welcome, but it's difficult if you rely too heavily on the tool. I mean, I often get draft documents from co-counsel or from anybody else, and I'm not signing my name onto anything until I go over it very, very carefully to make sure that it's accurate in all respects. And so as long as you're responsible about it, I don't care how you get there. My last judicial job was on the Court of Appeals, and there was all this concern about, well, what do we do if attorneys are using AI to write appellate briefs? And my reaction was, if they're producing better briefs, that's fine with me.
As long as they're, accurate and they're not making stuff up.
Right,
Speaking
exactly.
of making stuff up, I'd spoken to that a few minutes ago about the algorithm came up with the answer, so it has to be right. That's literally, that did happen.
Yeah.
So it's kind of a try. I had to try really hard on that one. All right, so
and don't you think Judge Yates and Judge Driscoll, I mean, I had this in a trial that I had, I think I've talked about it on this program before, where there was an expert had used some sort of algorithm to look up some case law and a patent type dispute, indemnification dispute. And I mean, the cross-examination about where that came from was really powerful. So, I mean, I think that's what you're always concerned about, whether it's in a deposition or having potentially that whole expert report being excluded or cross-examination at trial. So I think that's just like anything else. I think it goes back to what Judge Driscoll said. No matter what source you're using, you have to be able to back it up, and you're going to be signing your name on it, just like you would anything else.
Right. Which brings me to expert reports and AI.
See, there you go. I knew your segue right there, Cheryl.
There you go. There you go. You're a mind reader too. So has anybody encountered the report like the one that I spoke of? Well, it's the algorithm. Of course it's right. Or the computer said it's right, therefore it's right. And if so, have you encountered it in the context of a motion in limine? Or is it something that you just dug into yourself because it just smelled off?
So for me, I'm a heavy proponent of the adversary system. Let the lawyers do their work.
Right.
And the more you get involved as a judge coming up with your own inquiries, the more you run the risk of being accused of a bias in favor or against one of the litigants. And the other is how many armies do I have to wage that war? The lawyers that are in front of me are often from firms with 100, 200, 1,000 lawyers. I got me, I got my law clerk, and I got me, and I got my law clerk. So that's not a war of attrition I can win. So I do rely on the adversary system. The day is coming when the expert doesn't spend a lot of time on his report, gets it out of AI, and the adversary's lawyer reverse engineers it and asks the question on cross-examination. Would it surprise you to know that I put this report through Claude or Grok or ChatGPT, and it is the exact same result? And no matter what the answer is, the expert's face will drop. And so I think the takeaway caution is to experts, just like it is to lawyers, just like it is to judges, do your work, do your own work, use AI as a tool, but it better be yours. It better be 100% yours, or else you run the risk, not only as Judge Yates and Judge Adams said, of inaccuracy, but also of I don't want to say plagiarism, but again, laziness, I suppose, more than anything else.
Lazinism, that's a word because I just invented it. All right, so you mentioned earlier about all the attorneys who have erroneous briefs out there, or they have citations that are hallucinated and so forth. I haven't seen a whole lot out there where somebody from my ilk is coming in with a citation to a study that's bogus. Have you guys seen any of that?
I haven't, but I haven't been looking for it. For some reason, AI understands what a citation's supposed to look like,
right?
But it doesn't understand that it depends on the absolute accuracy of the citation to be persuasive. Now, I don't doubt that 3-5 years from now, we'll get there. And as I understand it, Judge Adams referred to Westlaw, for example, that Westlaw has a tool now where you're essentially guaranteed that you're going to get legitimate cites if you rely on AI to produce a brief. I haven't worked with that particular variant, but I suspect we're going to get there sooner rather than later.
Guaranteed, huh?
No, I wouldn't say guaranteed. And it's interesting. I talked to my clerks about this. It's a product called CoCounsel, and CoCounsel really wants to give you a result, just I think like any other AI thing. And I'll typically do my normal type of research first, whether going to a treatise or typical Westlaw terms and connectors, and then I'll do a backup with CoCounsel just to see if I've missed anything. I think the risk that I would say our law clerks or young associates are having is if they go straight to CoCounsel and they just think this is because CoCounsel said this is the site, I'm just going to put it in my brief or my draft opinion. Whereas I've been practicing or judge for 20 years and I can look at that and say, well, the words are there, but that's not exactly what it means. And I think that's, I'm sure you're seeing some of that in your industry as well, in terms of AI, because it's just so the theme of today, just like double checking it, like, okay, those are the words. Like you had asked, I think in your slides, talked a little bit about cryptocurrency, and I found one case in Delaware that had valued cryptocurrency. So what I did is I like ran that through CoCounsel to say, was there any other case? And it gave me another case, and it was about cryptocurrency, but it was about personal jurisdiction. It wasn't about valuation. So it's little things like that.
Okay. Yeah. But it's out there. Is the point. And fortunately for us, it's the people who hire us, the attorneys, that have to be aware of what's going on in that space. So, okay, a few months back, maybe a year ago at this point, who knows? We talked about what's admissible, what's not admissible when, the rules of evidence changed the first time, right? Do you folks think, and this is totally off the record, not being recorded at all, but do you think that we need to adjust the federal rules again to address use of AI as a tool?
I think the biggest concern is that foundation traditionally has been really easy to establish to get exhibits in, whether it's a video or a photograph or something else. Okay. And as long as the witness on the stand can say, yep, that's what it is. I believe it to be so. I prepared it. These days, with the facility to produce deepfakes, I wish there were a much more exacting approach to foundation than the one we traditionally have had, because the assumption's always been, well, look, it's here, it's in court. We have a sponsoring witness. That's good enough to get it in, and then leave it up to the jury to decide the authenticity of the document. I think we may wind up having to do something like Daubert light analysis of exhibits eventually.
But at what point, though, Judge Yates? At what point? I mean, is it, I've seen a lot of literature on the liar's dividend, right?
Right. Yep.
This can be produced by AI. Therefore, proponent, you have to go forward. You have to do more than you would otherwise have to do. And the thought under the proposal with the federal rules, Cheryl, as you know, is that's not good enough. It's really up to the challenger. Once there's been the threshold showing of authentication,
absolutely.
Then it's up to the challenger to go a little further, other than just saying,
right. I just think judges need to be a bit more skeptical these days than they had to be 20 years ago. I mean, I don't even remember any realistic, plausible challenge to foundation when I first started out as a federal prosecutor a million years ago. Now, it just seems like the possibility is so manifest that we've got to at least be on guard as trial judges.
Right. I think that holds true also for us, because we don't know where it's coming from. And just like when computers came out, well, the computer said that's the number. Well, so what? No, that's true. That's computer said so. And so anyway, just moving along. So I think we're probably running tight at this point. I think, we've also heard online that AI has a lot in common with the junior associates, both in a law firm and probably in an accounting firm, whether it's in a financial expert witness office, a boutique firm, if you will, or just a plain old financial statement tax preparer. CPA firm. Where do you guys think this is going? I mean, are we actually training AI to be that expert?
Unless AI can explain in a coherent way what the conclusions are, I don't see robots testifying in my courtroom anytime soon.
Right.
I still think it's about relating, and whether it's relating in this manner or whether it's relating in person or relating just audio, there still is a tone of voice, there's a cadence, there's a look, there's something in the eyes as to where the eyes are focusing. I still think those all matter.
Yeah, Cheryl, I can think of no better person to answer this question than Michael Kaplan. And we were just getting the word from Mel. You better throw it to Michael Kaplan. So
perfect. Thank you for having my back on that. Thank you, guys. Appreciate you.
Thank you.
Of course.
Okay.
And I want to thank our judges also. They are always outstanding and give us a lot of food for thought and a lot of direction. I'm thinking back more than 50 years ago when I accepted a position with a local CPA firm, a local accounting firm, where I got my introduction into the world of financial forensics. And the firm did forensics, they did accounting. And one of the senior partners of the firm took me aside in the early days, and he said, Michael, at the hourly rates that our clients pay us, they are entitled to hand-posted general ledgers. We don't use any of these computer things. And the guy was serious about it. Technology has evolved. And we, as professionals, have to evolve with it. I'm also going to bring up a concept, a statement spoken by the great American philosopher Frank Rosillo. And his statement is, you own it. No matter what we do in our profession, whether it was generated by junior associates, senior associates, partners, or AI, when that product is done and we walk into the courtroom with it, we own it. And everything that's right accrues to us. Everything that's wrong accrues to us. And now with AI, and we know what some of the weaknesses are and some of the potential dangers, a lot of the potential dangers, we just have to protect for it. We just have to protect ourselves. One of the things that I think is a huge important tool that we can help prepare for our trials, prepare for our appearances in court, is we, in addition to preparing our report, formulating our opinions, getting our work papers together, our reports together, we need to prepare to cross-examine ourselves. We need to have someone in our own offices or in the law firms that we are working with prepare not only direct examination to present us, but put us through the process of cross-examination. Have someone who's going to be very, very targeted, who could position the questions, who can set up the questions in a way that it would put us into a corner. So we have to answer the questions. We have to respond to them in a way that we'd be responding them in the courtroom. And we can be thinking about those things that we need to be prepared for. If we don't do it, if we don't look at our own work from the position of the other side and don't have someone approach it from the standpoint of cross-examining us, we're going to miss things. We're going to miss things that AI does. We're going to miss things that we do or don't do. But we own it. We've got to cover the bases. We have to review, we have to verify. In my practice, I've hired a legal research assistant to look at everything and to verify the things that I do and verify sites and verify sources. The it's just part of the process. And as AI gets better, as technology gets better, we have to get better in terms of dealing with it. And in the short time that I have, I'm going to step back and turn the microphone back. And again, I want to thank all of our judges. They've been outstanding.
Thank you, Michael. So good to hear from you always, and I hope to see you in Salt Lake City. So, all right, now we're on to Michael Mulder. He's going to be talking about a case. I'm interested in this case, Michael. So I can't wait to hear what you got to say. And I know that we're running tight, so I'm going to let you just take it away.
That's fine. This actually is a hot button issue for a lot of people. Everybody I talk to has a different take on how you comply with this requirement. So what we're going to talk about, you don't need to see that again. Sonate Corp versus Beyond Meat Inc. It's a case that comes out of the District of Massachusetts. It originated, I think, in Florida and then got transferred to the District of Massachusetts because one of the original defendants was Dunkin' Donuts, or I guess they're just called Dunkin' now. But and they are headquartered in Massachusetts, and so it got transferred up to the District of Massachusetts. So the two issues that come up in this opinion, the one that I think is more important to most of us is what you're required when Federal Rule of Civil Procedure 26 says your report has to include an identification of all facts and documents that you relied on. What does that actually mean? And the other thing, and whether it's federal court or a lot of state courts follow the same kind of principle. So what is this issue of reliance? And then the other thing that's addressed in this opinion is a waiver of attorney-client privilege related to disclosing information to an expert. So here's what happened. The plaintiff is a manufacturer of plant-based meat substitutes. They operate under the brand name Vegadelphia. I'd never heard of them before I read this case, and I live in Philadelphia, so there's that. And the defendant, like I said, Dunkin' Donuts was originally defendant, and the other defendant that continues on and is the defendant involved in this opinion is Beyond Meat. And Beyond Meat makes Beyond Burgers and a bunch of related products. So they were doing a promotion with Dunkin' Donuts, and they used a tagline called "Great Taste Plant-Based." And in other commercials or advertisements, they were saying "Plant-Based, Great Taste." And the plaintiff had a long-standing slogan of "Where great taste is plant-based." So they sued under trademark infringement. During discovery, the defendant, Beyond Meat, produced a series of documents. They were emails between counsel and the client. And the plaintiff's counsel, recognizing that this was potentially privileged information, contacted defendant's counsel, and they agreed, and they agreed to destroy their copies. And defense counsel issued redacted versions of the documents. Everybody was happy. Case proceeds. Later, in what I believe is a mistake of epic proportions, defendant's counsel, or somebody who works for defendant's counsel, inadvertently produced the original unredacted versions of the documents to an expert witness. According to counsel, it had to do with a new document management platform that they were using, and something about assigning a control number to the document. And even though the document shows up with multiple Bates numbers, which for those of you involved in litigation, that's the number that gets attached to the document so everybody can know that they're talking about the same document. So he didn't realize that when he sent the bunch of information to the expert, that it included the original version of the document, not the redacted version of the document. The expert's report included as an exhibit a list of all documents considered. And at the end of it, at the end of it, there was a section of this listing that just said all documents received. According to the expert's testimony, the firm takes all information that comes in about a case and puts that in a separate computer folder on the network. And then they use an automated software to produce this listing that gets attached to the report of all the Bates numbers associated with each file in the folder. I'm guessing this is an AI thing, and anybody who knows me knows I think AI is, at least so far, useless. So I'm going to attribute it to AI. At the hearing on this, the expert testified that he had never actually read those documents in either the original or unredacted versions. So the plaintiff's counsel, seeing the unredacted version of the privileged documents listed in the expert's report, said, whoa, 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 we want them, now that you have waived the privilege related to it. So legal standard on waiver of privilege and production of documents. So and I'm really trying to get this on time. So Federal Civil Procedure 26A2B, Roman numeral 2, requires disclosure of the facts or data considered informing the expert's opinions, including communications between counsel and the expert that identify facts or data that the party's attorney provided and that the expert considered in informing the opinions to be expressed. So the big question in this, oops, I think I jumped past one. The big question in this is, what does it mean? Or, well, so the first thing that the court dealt with, I'm sorry, is whether or not there was a waiver of privilege. And again, none of you are lawyers or you're not practicing law, so let's do this quickly. If you waive privilege by disclosing privileged attorney-client communications to a third party, then you have waived privilege and everybody else is entitled to get it, unless that waiver is inadvertent. So now, based on the attorney's explanation of what happened, the court concluded right off the bat that the disclosure of the document to the expert witness was inadvertent and therefore privilege was not waived. The bigger question, as far as we're concerned, is what is required by an expert to disclose about the facts considered. The court noted that there was no First Circuit ruling precedent on it. Other district courts within the circuit have described it as all materials that an expert creates, reviews, reads, or uses in connection with formulating an opinion, even if the expert does not utilize the information from the materials. That definition would go to support the expert's thing of, okay, everything we received goes into a folder and we disclose all of that. There is, in fact, very little information or precedent anywhere in the country on this particular issue. The most common case cited is called Pertile versus GM LLC. And ultimately, the conclusion in that case is it's something more than, or something less than relied upon, but something more than it's just part of the expert's background knowledge, which is not particularly helpful at all. Plaintiff cited a case within the District of Massachusetts, Boston University case. And if you're interested, shoot me an email and I'll give you the citation. It's not a big deal. But in that case, the expert received privileged documents, but when testifying about it, said, I don't remember whether or not she opened one of them, and she remembered opening the other one, but didn't use it at all. And the court found that those documents were discovered under that theory that once you've looked at it, it's discoverable. The difference in this case which is part of why we ended up with a different result in this case, is that in this case, the expert specifically said, I never looked at any of these documents, the documents that issued, the unredacted or the redacted versions of it. It was just sent to me. I didn't use it. I didn't read it. I didn't know anything about it. The other thing that in the Boston University case, what counsel sent to the expert was test results. And it was as opposed to just a couple of emails included with a bunch of other stuff. The court, the Sonate court concluded that if an attorney is sending test results to an expert, the expectation of the attorney is that they're going to find something valuable in those test results. So that was a distinction between Boston University and this case. Ultimately, the judge denied the motion to compel. So the takeaways, and I'm actually going to make it on time. There is no definitive guidance anywhere on what the phrase considered means in the rules about disclosure of documents or information considered. It is typically I got that backwards actually in the conclusion. It's actually typically something more than just made available to, but less than actually relied upon. And for those of you familiar with Potter Stewart's famous line, the case was Jacobello versus Ohio, and the Supreme Court was dealing with a prosecution for obscenity. And Judge Stewart essentially said, and I guess it was a concurring opinion, that I can't properly define it, but I know it when I see it. And it seems to be that that's pretty much what documents considered is too. And with that, I will pass it on to, I think, Alina.
Thank you, Michael. And for everyone, there is the fifth polling question. So you can go over there and respond to that. Because now we are going to our last presentation. And let me look for my informations. We should have Hubert with us. Are you here?
I am here, Alina.
Okay, perfect. Thank you. So Hubert is part of the Leadership Initiative Board with me. He's been since 2025, and he's a partner in Eisner Advisory Group. He has a lot of experience in forensics and litigation support, commercial litigation. So he knows about this topic that we are going to be discussing today, especially because we tend to believe that we are eternal, right? And we forget that we are getting older and older, not as young anymore. So for me, this is a very interesting topic. That's why I'm the one interviewing you today. And we are going to talk about mentoring and developing the next generation of forensic litigations and valuation professionals. How are you today, Hubert?
I am well. Thank you for being here. And I'm just happy to say that I'm in good company. We got Ron and Glenn, who were LIB members. They're great to be with. Dorothy's on here. I heard a lot of things. Judge Driscoll, you struck a nerve. All right. Is it turntable versus record player? I love Bat Out of Hell. I love the songs that people don't like, other than the Paradise by the Dashboard Lights and 2 out of 3 ain't bad. But Heaven Can Wait. It was a great song, too. So it's great to be here today.
It's great having you. So why are you so interested in this topic? Why is mentoring the next generation of forensic accountants so important today and so important to you too?
Important to me for the fact that when I was in college, it wasn't something they talked to you about or taught you about. They taught us to be accountants, right? And what you needed to know about debits and credits and the purchase and pooling method of accounting. And when I got my first job, my first employer and the senior partner boss was very interested in my career development. It's not something I had heard about, And he really worked with me, and he was doing valuations back then. And I found that it was interesting. And I went to him to learn, and he was actually one of the people who wanted to teach versus my friends who were at other firms where people wanted them to do the work and get the work done and get the billable hours, but we really weren't interested in the teaching aspect of developing somebody. And I think that's where you kind of see the difference in someone's the quickness of how they progress in their career. Are they thrown to the wolves and you sink or swim? Or does somebody mentor you through the process to help you understand and build your confidence? And I think this profession is not just about the training, but also somebody showing you how to do it and helping you build your confidence to succeed in the career.
That is right. I think that it's so, so important. I remember a time when we had a staff that he was getting this big offer to go to an international firm, another one. And that's what we discussed. You know, there is some things that you can learn here. And he decided to stay just because he knew that he was going to be mentor. And I think for this new generation, it's even more important than just the big check. So what are the biggest talent challenges facing the profession right now?
Well, one of the big challenges that I see, in addition to being a full-time forensic litigation evaluation professional with a firm where we have about 90 people who do this work, I'm also an adjunct professor at a university in New Jersey. The challenges are people are trying to steal the talent before we even get a chance to talk to them. One of the first things I asked the students in my master's level class, do you have a job offer or are you interviewing with anybody? And more often than not, they have a job offer or they're interviewing, and it's usually with the big four or somebody in the top 10. So I'm seeing that a lot of talent is being approached long before they enter the interview process for a mid-size or a smaller firm. And I think that's a challenge. How do we get them? How do we keep them interested? And if we get them, how do we keep them? Like you said, it's not always about the money. You can make more money elsewhere. People will pay you more money to get you. But is that going to make you better at what you do and make you successful down the road?
That's right. In the long run, what is important to you? But one of the things that I have learned too is that you may be a good auditor, or maybe you may be able to excel in taxes, but what qualities distinguish outstanding forensic professionals? Because those are not the same qualities, right?
The skill set is the same. It's how we utilize the skill set that may be different. And also, if someone gets 100 in every test, that's great. And, in audit and in areas in tax, yes, you can hide being a great technician and a super smart technician. But in the world we work in, especially if we're trying to mentor the next generation, there's a lot of people skills that are involved. The ability to talk to others on your team or even outside of where you're working with your clients or engage with attorneys. Those are important skill sets that they don't teach people in college. And I've seen people who don't have those skill sets at a young age, but who can develop them over time. I know a lot of people on this webinar, nobody will believe that I was a person who sat at the back of the class, never raised my hand, and was a shy person at one point in my life. Believe it or not, you can develop somebody, and it's really about helping them to understand the skill sets that they need, work with them to develop them, and help build their confidence, because a lot of what we do is about the confidence in believing what we do and believing what we do is right.
So when should young people begin interacting with clients and attorneys?
My philosophy is I let them do it after a few months of working with them and getting a feel for how they work. There's no problem if they prepare a doc request and you review it and it's fine and they send it off, and they can send out the follow-up email in a few weeks or a month to say, hey, we're looking for these documents. Here's what we got. When are they coming? I believe in being proactive with them and also asking them, are you comfortable doing this? I think that's part of the process. I see too many people over the years where they've worked on jobs for a lot of different people, and they'll come back at the end and say, I did all this analysis work and I prepared all these schedules. Whatever happened in that case? That's really not a good place for young people to be, because they feel more like a cog in the machine than actually
part of the team that helps get the project to fruition, whether it's a litigation job, whether it's a non-litigated valuation or an estate and gift. Like, they want to know what they contributed was useful and valuable, and they're looking for that kind of engagement and feedback.
So I had a partner that always said that the new staff may have 100 in initiative, but 0 on judgment. So how do you teach professional judgment instead of just technical skills?
Well, technical skills are learned, but if they're not applied, right, then it's just a technical skill. You have to learn what the skill is and what it means and develop judgment. Judgment is something you develop over time. People make mistakes. Your new team members will make mistakes. If I had a team member who never made a mistake, I would be worried, because if they progress in their career and all of a sudden they make a mistake, that might crush the rest of their career. So making mistakes is human. And I learned that from my mother. The most valuable piece of advice I ever got was from my mother. And I coached baseball at a youth level. And I had a bunch of kids, and they all went to the plate, and they all struck out without swinging the bat. And for anybody who's coached baseball, softball, you know how frustrating that is as a coach. And we get annoyed, and we pretty much get on the kids. You got to swing the bat and all this and that. After the game, my mother came up to me and she said, "I know you're not happy, but they know you're not happy." She goes, "Why don't you ask them why they're not swinging the bat?" And I said, "What do you mean why they're not? They should be swinging." She goes, "Something's obviously making them not swing." I talked to them, and they found out the pitcher on the other team had a reputation as being the fastest pitcher in the county, and they were afraid of that person. So I realized as a coach, my job was to make them confident that they could hit the ball. It wasn't just about going up there. And, so I think you need to listen to people. If they make mistakes, sit with them. They make a mistake, it's probably because of their thought process, and I can fix that. I can show them where they went wrong in the thought process, or show them the alternative if they were tunnel vision in their thinking. And I think that's what we need to do to make people better. People will make mistakes. Criticizing isn't always the out. Now, if the mistakes are repetitive, that's a whole different issue. But I think mentoring and working with them and understanding how they think, so we can help shape their thought process and their problem-solving process, are important.
Right. So what skills will become even more valuable in an AI-enabled profession?
I'm going through it right now. We have a focus on using AI to help with data entry and certain other things on projects, things at the staff level people did. And I took it this way. Let's turn our data inputters into data analysts. So that's really where the pressure is going to come in, is making people better at analyzing, interpreting, and understanding the data as to what's going on, and then also provide them the training and the mentorship to make them better at that. But the world is changing. I started in 1986 when we were converting from hand tax returns to Computax down in Dallas, Texas. And everybody said the computer will never replace the human accountant to do tax returns. Well, guess what? We all know that changed. I think AI is going to have the same impact. At what rate, I don't know, but we need to make them better at doing it. What I do know is the younger generation understands technology a lot better than my generation. So I think that's a positive for them. They embrace technology, just like they embrace social media or anything else. If I have a problem with something technologically, whether it's my iPad or my computer or even my iPhone, I ask one of my kids, or I ask a younger person in my office, because they grasp that much better than me. So we have to figure out how to harness that innate ability they have and how they can translate that into being a good valuation or forensic professional.
So you mentioned at the beginning we were discussing about compensation and mentoring, but how can firms retain talented young professionals beyond compensation?
Yeah, compensation is always an issue, but it's not the issue. And I found that over time. We always used to say the person who holds that gun to your head about compensation, that's the person, if they're just chasing money, they're going to leave it at some point in time. But what you tell them is, what are the opportunities? And I think as practitioners, we all have to understand that. The level of certified public accountants is going down nationwide. The accounting graduates and people entering accounting are fluctuating up and down. So the goal is, how do we keep them? I think the way you keep them is make their job engaging, rewarding, and make them feel as a part of the team as opposed to just someone who's doing numbers and stuff. If somebody feels that all I'm doing is spreadsheets or all I'm doing is research and putting something into a table and they never see the finished product, that person is probably the person who's going to become dissatisfied more quickly than others. But I've seen when you put team members on jobs and you have them working with a manager and they're really into the details on what's going on, you're going to get more performance out of them. And the other thing, if it's a litigated matter, I tell every associate, read the pleadings. They may not understand all of it, but they will understand some of it. And usually if you read the pleadings and you understand what's going on in the counterclaims, you kind of lit a fire under them to say, hey, this is interesting. I want to work on it.
That is great. So if you could leave the audience with one message about mentoring the next generation, what would it be?
Invest. We invest in our careers. We invested in our firms. We invested in ourselves by becoming members of this organization, getting credentialed. Invest in your largest asset, your human capital, your employees, your partners, your directors, your staff. They are the largest asset, and they're the reason that we become successful. Invest in them, to train them, train people to want to stay. Don't ignore them so they want to leave.
Oh, that's amazing, Hubert. Thank you. And thank you for being with us today and for this message. And NACBA conference is coming up in October, and many of our young members of our team may be interested in being CBA or, getting accreditation. So it is a great time to invest in them. So thank you for being with us this month. And for the rest of you, thank you for joining us too. You are invited to attend next month's broadcast. It's going to be August 17th. So if you would like to become a guest on the webcast, you can mail Chanda, and the email is on your screen. And thank you again for being with us today. So see you next month. Bye-bye.